has been a long minute since we last checked in on those crazy YieldMax dividends. They have added a bunch of new ETFs, so it is time to see if they are still worth all the fuss they have been getting. Hold on to your seatbelts, folks. This is going to be a good one. YieldMax is an American manager of a set of synthetic covered call ETFs that have been boasting some very high dividends. In fact, their flagship Tesla ETF is claiming a 51.47% dividend. That is absolutely bonkers. But what if it isn't? First, we need to catch up on what a synthetic covered call is. A synthetic covered call is created by holding a long position in a call option while also writing a call option with the same expiration date but with a higher strike price. So what this of course does is that it generates income from both the premium received by selling the call option while also benefiting from the potential upside in the underlying asset's price via that long call option. If the underlying asset's price remains below the higher strike price, the written call option expires worthless and the investor simply keeps the premium. If the price rises above the higher strike price, the investor's gains are capped by the written call option, but the long call option increases in value to offset that loss. There, of course, are risks for sure with this type of strategy. For one, this strategy does utilize margin funds that are used as collateral, which can, in certain market conditions, result in some of that capital getting tied up or, well, maybe a little bit worse. There are more moving parts that can get bogged down with liquidity issues. In addition, where this strategy does not actually hold the actual asset, any dividends involved do not enter the equation for your payout. This is a relatively newer form of high-income investing. So we also do not have a clear history across multiple market conditions to get a good feel for how these funds behave across weak or strong bear or bull markets. On the bright side, we do have more data on some of these older funds than we had last time. Join the conversation. Let us know in the comments if you have tried any of these ETFs. Your participation is well appreciated. And don't forget to like and subscribe to stay up to date on future content. And a huge thank you for that click. There are currently 16 of these YieldMax ETFs, and this would be a very long video if we broke down all of them. However, we will look at a handful of the more popular ones. All of these ETFs today, they do have an expense ratio of 0.99%. In regard to dividends, the amount they pay out does change every month, depending on how well the ETF did. So there is some variability in these numbers, though they are pretty much still crazy high from month to month. One key point to always remember is that these synthetic covered call ETFs do not hold any of the actual assets, thus they are not directly invested in the assets they are writing options on. So without any further ado, let's do this. Kicking off this list, we have the YieldMax Tesla Option Income Strategy ETF with a ticker of TSLY. This is pretty much their oldest ETF. It started trading back in November 23rd of 2022. They have net assets of $714.56 million, and their beta is more than twice as volatile as the market average, coming in at 2.139. When we look at that return, though, their yield does come in at 51.44%. It is a monthly dividend paid out in the amount of 57.7 cents USD per share. Keep in mind, this does move every month, so next month it may not be 57.7 cents. It could be higher, could be lower. When we look at their 1-year return on investment, that comes in at negative 32.83%, and they have a total return after we factor in all of those awesome dividends of 6.76%. The only way you actually experience this low of a return is if you bought within the first 2 months of their initial offering, and even then, you are still ahead of the game. Now, if we look at just this year, 2023, year to date, their return on investment, it's much better. It's 0.45%. Adding in those dividends, we get a more reflective total return of 59.66%. That is not too shabby. Once we got into this year, this has been a nice ride for those who climbed aboard. There is no guarantee that this will persist, but it sure does look inviting. Up next, we have the YieldMax AAPL Option Income Strategy ETF with a ticker of APLY. They began trading this year, April 18th. They have net assets of $58.89 million, and their beta is a little more stable, coming in at 1.394. Their yield comes in at 30.27%. It is a monthly dividend of 47.8 cents USD per share. Looking at their returns, we've only got the year to date that we can work with, and the year to date they have a return on investment of negative 6.19%. Adding in, of course, the dividends, that brings us up to a total return of 4.60%. This ETF was doing great until they had a big drop in the summer that they are still trying to recover from. This one does look less appealing than the Tesla one. However, it will be interesting to see if that changes once the ETF recovers a wee bit more. Up next, we have the YieldMax NVDA Option Income Strategy ETF with a ticker of NVDY. That one started May 11th, 2023. They have net assets of 154.42 million, and their beta is pretty average, to be honest, at 1.026. They have a yield of 36.41%, and that is paid out monthly in the amount of 67.7 cents USD per share. Year to date, their return on investment comes in at 12.05%, and that gives us a total return after we add in the dividends of 32.77%. NVIDIA did benefit big time with the AI boom in 2023, and there is no wonder that this ETF happily followed along that trend. This one is definitely another nice one. Up next, we have the YieldMax AMZN Option Income Strategy ETF with a ticker of AMZY. That one started trading, not that long ago, July 25th actually. Their net assets, that comes in at 25.79 million, and they've got a very volatile beta, almost 4 times as volatile as the market average at 3.787. Their yield comes in at 38.29%, and that is paid out monthly in the amount of 63.4 cents USD per share. Their year to date, they have a return on investment of negative 1.10%. Add in that dividend, we get a total of 4.41%. Amazon is very new, so it is really hard to get a sense on how well this data set is. I do expect if Amazon recovers a little more, this ETF is going to follow. Up next, we have the YieldMax Coin Option Income Strategy ETF with a ticker of CONY. This one started trading in August 15th. They have net assets of 26.93 million. They do not yet have a beta. That's how new they are. When we look at their yield, this one's a little crazy, 78.98%. That is paid out monthly in the amount of $1.20.9 USD per share. So far this year, they have a return on investment of negative 8.06%. Factoring in the one dividend they've received, that gives us a total return of negative 2.01%. This one is also super new, and Coinbase has not helped them any in the initial offering stage, that is for sure. This dividend is big, but like all of these, it will move around, and overall, that yield will settle to a lower rate. Just look at the Tesla one. The yield was around 65% last time we peeked in on them, and now it is around 51%. These are 5 of the more popular ones. They also offer synthetic covered call ETFs for ARK, Meta, Google, Netflix, Disney, Microsoft, Zom, JPM, AMD, PayPal, and Square. As great as these dividends are, though, remember, they are U.S. dividends, so if you hold them in your TFSA, you will be paying a 15% withholding tax on them every single month. These are better held in your RRSP if you want to avoid those taxes. So we have once again looked at some really great looking dividends, but don't forget there is risk involved, and these are not ETFs to throw money at lightly. A big heaping helping of due diligence will go a long way towards protecting your hard-earned money before you jump into one of these ETFs. If you and your due diligence do decide to invest, well, I also recommend that you watch the investment, as the history is just not there. And many very good investors will often say to be super wary when you see dividends that are too good to believe. And holy banana bread, do these fall in that category for sure. Keep the learning going. Watch my video on Dallas International, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.